Welcome everyone, I'm glad you're here. In today's video, we're diving deep into what just happened in the market this morning because it was extremely volatile and full of opportunities, but also a lot of lessons. We just wrapped up a live trading session, and honestly, it was one of those days where the market moved fast, gave signals, pulled back, and tested traders emotionally. Even though there was a strong move in APLD, we didn't fully capitalize on the entire swing. And that's exactly what makes this worth breaking down. In this video, I'm going to walk you through what we saw, what we could have anticipated, and more importantly, why APLD is becoming one of the most important data center stocks to watch right now, especially in the context of AI infrastructure and the companies powering that growth behind the scenes. This video is for educational and informational purposes only and should not be considered financial, investment, or trading advice. I am not a licensed financial advisor, and all opinions shared in this content are based on personal experience and market analysis. Trading and investing in stocks involves significant risk, and you should always do your own research and consult with a qualified financial professional before making any financial decisions. Past performance is not indicative of future results, and there is no guarantee of profit. You are solely responsible for your own investment choices and any outcomes that may result. So let's start with the bigger picture. If you're someone who wants exposure to the data center space, especially the companies that are enabling major AI players and hyperscalers to operate, then APLD is a name you need to keep on your radar. This company is heavily involved in providing infrastructure that supports high-performance computing, including partnerships and systems that help deliver power and scalability to data centers. These are the kinds of companies that sit behind the curtain while major AI platforms grow, and they play a critical role in enabling that expansion, particularly when it comes to energy efficiency and renewable powered operations. Now, focusing on today's price action, one of the first things we noticed was that APLD began recovering after a significant drop yesterday. The stock experienced a sharp decline, and during that dip, there was actually an opportunity to trade it, which we took advantage of. Moving into today, we started seeing a recovery forming, with the stock climbing roughly 10 to 12%. That kind of bounce always gets attention, but the key question is whether it's sustainable or just temporary relief. To understand that, we need to look at historical support levels. APLD has shown a strong tendency to bounce around the $20 range. We've seen this multiple times in the past, including back in September 2025 and again around the $19-20 zone. This level has acted as a psychological and technical support area where selling pressure tends to slow down and buyers, often institutional investors, step back in. Typically, what happens is retail traders get exhausted during sell-offs, and that's when larger players start accumulating positions. This repeated behavior makes the $20 level incredibly important, and once again, the stock bounced right from that zone. However, even though we're seeing this recovery, it doesn't automatically mean we're in the clear. The broader market today is very bullish. Many stocks across the board are pushing higher, especially in the AI and data center sectors. You're seeing strong upward moves not just in APLD, but also in other related companies, with gains ranging from 5% to over 10%. That kind of synchronized movement often reflects macro momentum rather than stock-specific strength alone. Now, here's where things get interesting. When a stock recovers sharply after a drop, the next major test is resistance. For APLD, there's a clear resistance zone around $23, which previously acted as support earlier in March. This is a classic technical behavior. Old support becomes new resistance. If the stock struggles at this level, it could signal that the recovery is losing strength. To add more context, we also need to consider the overall market trend. If you look at the broader market, particularly through major indices, you'll notice that while the long-term trend has been bullish, the short-term movement has shown some inconsistency. Over the past few weeks, we've seen patterns of lower highs and lower lows, which is typically a sign of a short-term downtrend. Even though today's move looks strong and could potentially form a V-shaped recovery, There is still a possibility that the market continues its downward pressure after this bounce. This is important because APLD is following a very similar pattern. Since late March, the stock has been trending downward, forming lower highs and lower lows. Today's recovery is encouraging, but it doesn't yet confirm a full reversal. If the stock can break above key levels, like $25, and push toward the $29 range, that would indicate a stronger breakout with significant upside potential. But until that happens, we have to remain cautious and recognize that this could still be part of a larger downtrend. In the short term, volatility is going to be a major factor. Data center stocks, especially those tied to AI growth, tend to move aggressively in both directions. This creates opportunities, but it also increases risk. Managing that risk becomes critical. During today's session, there were trades where losses had to be cut, and in some cases, even inverse strategies were used, which carry their own risks. This highlights how important discipline and patience are when trading in these conditions. Stepping back and looking at the longer-term picture, the story becomes much more compelling. Over the past year, many data center companies have experienced massive growth, in some cases delivering returns of several multiples. APLD itself moved from around $3 per share to as high as $42 before pulling back to the low 20s. That kind of movement shows both the potential and the volatility of this sector. From a fundamental perspective, the outlook remains strong. The demand for data centers continues to grow rapidly, driven by AI, cloud computing, and large-scale digital infrastructure needs. APLD is actively investing in expanding its capabilities, including major projects focused on power generation. One recent development includes a multi-billion-dollar initiative aimed at increasing energy capacity to support AI-focused data centers. This is a critical factor because power availability is one of the biggest constraints in scaling data center operations. Financially, the company is also in a position that allows it to continue expanding. Revenue has been increasing, assets are substantial, and while the company is not yet highly profitable, it has enough runway to sustain growth and investment. Institutional interest is another key signal. Large firms are continuing to buy into the company, which suggests confidence in its long-term potential. That said, there are still risks. Costs remain high and short-term price movements can be unpredictable. Insider activity shows some selling, which is normal, but it's something to monitor. In the near term, there could still be bearish pressure, especially if the broader market weakens again. So where does that leave us? In the short term, it's all about watching key levels. The $20 support is critical and must hold to maintain any bullish structure. Resistance levels around $23 and higher will determine whether the stock can continue upward or gets pushed back down. In the long term, however, the outlook remains optimistic, with potential for significant recovery if current trends in AI and data infrastructure continue. To wrap this up, today's market action was a perfect example of why trading requires both strategy and emotional control. Opportunities are always there, but not every move can or should be captured. What matters most is consistency, discipline, and the ability to manage risk while staying focused on the bigger picture. APLD is definitely a stock worth watching, not just for short-term trades, but for its role in a rapidly growing industry that's shaping the future of technology. If you found this breakdown helpful and want more insights like this, make sure you stay connected for upcoming videos where we continue analyzing the market and identifying key opportunities. Like and subscribe.